All right, welcome back to another episode of the Black Bullion Show, and the divide between Main Street and Wall Street continues. Now, this is the real reason behind why gold and silver dropped today, and honestly, the reason why they've been moving sideways in general or dropping on a specific day. Now, in fact, we actually have textbook data that shows the growing divide between the haves and the have-nots that we got today. In our case, let's just say that the haves are the ones who own stocks, have white-collar jobs, probably haven't been impacted too negatively by what we call here the Ronies, and may be experiencing actually a lifestyle upgrade by being able to work from home in a newly bought property at low interest rates. Let's say the have-nots are generally people who, may be having weekly income of like $58, like we saw in that one article, after having lost their additional $600 a week benefit. And let's also say that they could be the ones facing eviction starting in September that we also brought up on this channel as well. Now, we'll begin the video talking about the have-nots and the general frame of mind that they likely are in. And then we'll also be taking a look at the haves for probably a little bit more of the video. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. So today we got the August data for the Consumer Confidence Index. Now, the confidence decreased for a second straight month. Now, for those of you who may not know this, the survey is given to about 5,000 US households and is widely considered to be a leading indicator of what's to come in the economy. So let's get into this. Here's a quote here. Consumer confidence declined in August for the second consecutive month, said Lynn Franco, Senior Director of Economic Indicators at the Conference Board. The Present Situation Index decreased sharply, with consumers stating that both business and employment conditions had deteriorated over the past month. Consumers' optimism about the short-term outlook and their financial prospects also declined and continues on a downward path. Consumer spending has rebounded in recent months, but increasing concerns amongst consumers about the economic outlook and their financial well-being will likely cause spending to cool in the months ahead. Consumers' assessment of present-day conditions receded in August. The percentage of consumers claiming business conditions are good declined from 17.5% to 16.4%, while those claiming business conditions are bad increased from 38.9% to 43.6%. Consumers' appraisal of the job market was also less favorable. The percentage of consumers saying jobs are plentiful declined from 22.3% to 21.5%, while those claiming jobs are hard to get increased from 20.1% to 25.2%. Consumers were also pessimistic about the short-term outlook. The percentage of consumers expecting business conditions will improve over the next 6 months declined from 31.6% to 29.9%, while those expecting business conditions will worsen increased slightly from 20.2% to 20.5%. Consumers' outlook for the labor market was also less positive. The proportion expecting more jobs in the months ahead declined from 29.6% to 29.1%, while those anticipating fewer jobs increased from 21.3% to 21.9%. Regarding their short-term income prospects, the percentage of consumers expecting an increase declined from 14.8% to 12.7%, while the proportion expecting a decrease rose from 15.8% to 16.6%. So from all of this, you can generally tell that people aren't feeling positive right now about where the economy is and where the economy is going in the short term. Now, as far as a representation of the have-nots that we call them, I'm sure that many in this position would likely track similarly in their confidence if they were surveyed. Now, let's focus more on the haves, shall we? So let's take a look here from CNBC. Now, this news was the talk of the financial town this morning as stocks were initially boosted on this quote unquote news here of the US and China hold phone call on phase 1 trade agreement. Honestly, the fact that the market moves so much based off of so little is honestly hilarious to me. But hey, it was enough to keep the 10-year in risk on territory. Now, you guys should know what to expect now in precious metals whenever you see something like this in the yield and you see the yield going this high. Now, I mean, honestly, we were tracking very low earlier on yesterday, actually, and then we just been, skyrocketing here. So we're now at 0.7, indicates that we're pretty much in a risk on mood today. And in fact, this is the highest actually the yield has been in over a week, believe it or not. Now, on top of this, new home sales soared in July, as we kind of already know, due to many flocking to the suburbs on very low interest rates. Not too surprising to find it being the highest level since 2006 here, as the article notes, when you factor in that rates are so low. But again, stock exuberance, people buying homes, the haves are almost living in this twilight zone existence compared to the have-nots. Now, with all of this positive news in the market today, it had an impact on gold and silver prices today. So let's take a look here. Gold right now is at $1,918.63. Just went down just completely. Silver is down as well, $26.49. So silver and gold are down against this news, against this positive environment that we have today, this very risk-on environment. Now, I know on days like these that we've been having consecutively, it can be hard for us gold and silver stackers to kind of grin and bear, pun intended if you caught that one right there. But you have to keep in mind that we literally had 2+ weeks of feeling like we were on top of the world, starting from July 20th, when silver had its initial breakout, to about August 6th, when gold hit its new record high. We also have to keep in mind that those leading indicators, like the consumer confidence index that we got in August, and it being also the second straight month of declines since July, there's a lot coming down the pike that doesn't exactly spell good times. One recent example is the continued carnage on Main Street in college towns, where students aren't bar hopping on football Saturdays, and many have even packed up and left town, leaving many small businesses in the lurch. So I bring all of these points up to say that there's a lot here that deserves more than just a raised eyebrow, so to speak. So guys, stay vigilant. That was your Tuesday. Let me know what you guys think about what's going on between the haves and the have-nots in this economy in the comment section below. Please give the video a like. Please subscribe if you're new. It's Black Bullion.